In the energy quadrant, crude oil on the highs today, change on the day up near 2%, falling back as it always does. And I'm talking about WTI crude. Brent crude up much stronger than that as Russian production comes in lower again. Russian oil production is now down 6% from the month of April to the month of May. And even in the span of the first 2 weeks of May to the current week, where you've got May 1st to May 14th, Russian crude was averaging about 11.147 million barrels a day, down in the second or the last part of May, down to about 11.126 barrels a day. So down about 21,000 barrels just in the last 2 weeks. Part of it because of the contamination issues that they have with the Druzhba pipeline. It's not that they're not pumping, they're not able to put that crude oil to market. They're now actually in line with their promised OPEC production cuts. Could be part of why WTI is rallying, certainly a big part of why Brent rallied as much as it did today. Consumer confidence across Europe and the US might have had something to do with it as well. If you've got consumers that are feeling confident, they will drive more, they will take more vacations. In the EU, you had industrial confidence come in at down 2.9%, but it was expected at down 4.2%. So that's better production. Economic confidence in the EU, 105.1 versus 103.9 expected. Better as well. And the services confidence came in, which is an index, at 12.2 versus an expectation of 11. So those three indicators were better. And then U.S. consumer confidence, 134.1 versus an expectation of 130. And a last that was in the 120 handles. So definitely a very good set of confidence numbers from both the EU and the U.S., possibly pushing the potential demand down the road story. But then when you look at the curve's not telling you that, at least not in the short term. The crude oil curve on the short end is showing contango, which is the condition where the future prices are higher than the spot prices, and that's a situation where the cost to store is not being taken into consideration. But then you get further out the curve and we're in backwardation again. Contango does not help current long positions, as again the price is higher in the future, so it looks like that particular price is going to fall toward the spot price, so you won't make money on the rolls if you have to keep those contracts longer for a hedge. So a lot of what we're seeing now might be hedge related in terms of some of these positions coming off, but as again you go out further in the curve past the first 4 months, you are seeing the normal condition of backwardation take hold again.